Well, shares of Alphabet are trading higher after the parent company of Google topped revenue and profit expectations in its latest quarter. Revenue rose by 15% and exceeded $88 billion US. Alphabet is attracting more customers to its cloud computing business, which of course uses artificial intelligence tools. For more on the results from Alphabet, let's bring in an expert. He's Brad Erickson, equity analyst for internet stocks at RBC Capital Markets. Brad, thanks a lot for joining us. I've seen your report. You like these results. You have an outperform rating on the stock. You've raised your price target modestly by $6 US to 210, and you call the quarter assertively solid. Tell us more about what you think of this quarter's numbers.
Yeah, thanks for having me, Paul. Good to see you. Yeah, I think with using the word assertively, I think maybe less so about the numbers. The numbers were pretty good, but it was also about management and how they kind of sounded narrative-wise on AI, both around the search market share risk, as well as how much this is all costing to bring the infrastructure available for AI. And I think, like I said, they sounded very assertive. I think very positive on the call related to that.
Right, you phrase that in your report as countering the AI bear case. The bear case, I guess, being that market share losses are inevitable in search and that overspending is possible on AI. Is that correct?
That's right. That's right. I think everybody's really focused, and the public narrative out in the media and kind of everywhere right now is you've got all these increasingly well-known tools, right? Like ChatGPT, Perplexity, Anthropic has a bot called Claude, or a model, I should say, called Claude, and so you aggregate all those together, and it's just very logical that naturally put together they would all maybe take some share from Google, and they definitely are, but it's very, very small, and it's clearly not affecting Google's business at this point. I think what we're instructing or encouraging investors to think about more is distribution of these tools, right? And that now we're talking about Apple, right? So like all these tools are really good. ChatGPT is very good. Gemini is very good. All the other ones I mentioned are very good. And they're probably all going to become increasingly good and equivalent over time. And so then it just boils down to how do you get those products in front of people? That's being on Apple. That's being on all the Android smartphone makers. So that's really the big question.
The company's facing an antitrust lawsuit from the Department of Justice, and you liked the fact that management was fairly vocal in offering some assessment, some update on that situation. And I believe your takeaway is management probably would have left that subject alone unless they are confident that remedies being proposed by the DOJ are remedies that Alphabet can live with. Is that correct?
Yeah, I think you framed that up right. It was a little tongue-in-cheek, but normally in these situations, right, management, often us analysts won't even ask the question because we kind of know they can't really talk about it. In this case, it sort of tangentially came up, and Google's management said, hey, we can't talk about it, but what we can say is we do think some of the proposed remedies may have negative unintended byproducts, and that could be pretty bad. To make a statement like that on a public conference call to us suggests that they have gone ahead and started to test some of these remedies and the effect that they would have, because they got the list from the DOJ 3 weeks ago, and so the fact that he said that, my view is, we don't know this to be the case, but my view is that they have started to research what would happen. And that's a pretty bold statement to make when you're counter to the DOJ.
The company also addressed capital spending, which, as we've noted, has been a source of some market concern, but said it's managing costs as an offset to higher infrastructure spending. How much did we learn?
I think for the quarter, margins were incredibly good. In fact, aside from cloud and the beat on cloud, the upside on margins was kind of the single biggest surprise to the upside, probably single biggest reason the stock's up today. So in the near term, we're seeing that they call it durably re-engineering the cost base, which means losing fixed costs to handle this incremental depreciation as they invest for AI. There's still concerns. I think we took a look at street numbers next year for capex. They look low to us, is what I'll say. So those probably still need to come up. But I think there is so much cost in this model, fixed costs, headcount costs. I think at this point, at least for the next, call it 12 to 18 months, I think we do have a lot of confidence that they are going to be able to offset that higher depreciation.
Brad, thank you so much for your insight. That's Brad Erickson, equity analyst for Internet at